Hey, good morning, everybody. My name is Cliff Backus, and this is your PushButtonStockTrading.com Daily Video Market Review Weekend Edition. Before we get started, I want to talk about three pieces of software that I find indispensable. I once had a friend for whom I have the utmost respect admonish me against shilling for the software companies. But I feel strongly that traders can and should benefit from highgrowthstock.com, freestockcharts.com, and marketsmith.com. So, shill I will. Let's start with MarketSmith. MarketSmith is a set of investment research tools for mastering the market, offering a set of extremely robust stock screeners, charts, and pattern recognition. More importantly, we use MarketSmith to generate our stock checklist, which we use to develop our universal watch list. Take a free trial of MarketSmith. Next, we have freestockcharts.com, which is a Warden Brothers product and has all the versatility of their TC2000 program on an a la carte basis. These are the charts we use in our daily video market review. I use the premium version, but they also offer an advertising-driven free version. And lastly, highgrowthstock.com, HGSI. HGSI is a remarkably versatile product that I use for analyzing and screening data. The Spectrum Analyzer is an HGSI product, and you can get a 1-month free trial of highgrowthstock.com, and you don't even need a credit card. And that's our commercial for this week. Okay, much of what we do at Push Button Stock Trading is based in part or in full on William O'Neill's classic book, How to Make Money in Stocks. O'Neill utilizes the acronym CANSLIM to identify the important elements of what he's looking for in a trade. So let's take a quick look at that. The C in CANSLIM stands for current quarterly earnings and sales, and reminds us that we should be looking for stocks that have a minimum of 25% year-over-year increases in quarterly earnings and or sales, and preferably accelerating earnings or sales. The A in CANSLIM stands for annual earnings and reminds us that we should be looking for stocks that have an average of at least 25% annual earnings growth over the past 3 to 5 years. The N in CANSLIM stands for new products, new management, or perhaps new market conditions. The N reminds us that we need something new and exciting to sustain longer-term profit. The S in CANSLIM stands for supply and demand and reminds us that we want to favor stocks that have an average daily volume of at least 500,000 shares and trade at least 140% of their average daily volume on the day that they break out. The L in CANSLIM stands for leader or laggard. It's important that we identify where the leadership in the market is. We'll come back to that in a little bit. The I in CANSLIM stands for institutional sponsorship and reminds us that we want to find stocks that the institutional or professional fund managers are accumulating. And finally, the M in the CANSLIM acronym stands for market and reminds us that according to research, 75% of all stocks will follow the market. It's critical for our success that before we begin trading, we understand the current trend in the market. Okay, as we noted, the L in CANSLIM stands for leader or laggard. It's important that we identify where the leadership in the market is. To that end, we use HGSI, High Growth Stock Investors Spectrum Analyzer, to identify the market leadership on a daily basis. So let's get started with that. On Friday, of the top 100 most powerful stocks in the most powerful industry groups, 15 came from integrated utilities, 11 from precious metals, 10 from application software, 8 from real estate investment trusts. We haven't seen real estate investment trusts in a while. And rounding out the top 5, we had mass merchants with 6 stocks in the 100 most powerful stocks in the most powerful industry groups. These may be good places to look for leadership in this market. Let's start today with the Russell 2000. On Friday, the Russell tested minor support down here in the 1156 area and held. That's a good sign. It's a bullish sign. We'll see if we can continue to hold that area. If we continue to hold that area, the next significant area of resistance is going to be all the way up here in the 1205 range. See what the NASDAQ Composite's up to. But before we do that, stocks closed lower. After opening moderately lower Friday, shares continued to sell off before rallying and closing near their highs for the day. Volume was lower and below average on both the New York Stock Exchange and the NASDAQs. Bulls will appreciate the intraday reversal as indices closed near their highs for the day. All in all, it wasn't a bad day for the bulls. The NASDAQ tested and held above what's been stubborn resistance in the 4,900 area and appears poised for an assault on its April 19th high in the 4,969 range. Meanwhile, the S&P 500 is struggling with resistance in the 2,100 range, closing fractionally below that area. Distribution's no longer a concern. Currently, both the NASDAQ and the S&P have only 3 sessions in the past month, and we've not added a distribution day in 2 weeks. In light of recent market strength and the lack of recent distribution, the Investors.com market outlook is indicating a confirmed uptrend. Meanwhile, our market timing model is on our most aggressive buy rating, a margin signal. A margin signal indicates that aggressive traders can leverage their portfolios utilizing margin. More conservative traders should be working toward fully invested. In spite of the market being down across the board Friday, advancing issues topped decliners by about 5-4. New highs continued to handily outperform new lows. According to our Ramosi ratio, small capitalization stocks bettered large and continued to outperform on a 10-day moving average basis. Bulls prefer to see the small caps outperform. Our Ramosi swing timing model is indicating an overbought condition in the market. Keep in mind, an overbought market can become severely overbought. It appears that this market has sorted itself out in favor of the bulls, and while both the NASDAQ and the S&P 500 may struggle with resistance in this area, both have decisively broken out of their short-term downtrends. Our distribution count is no longer a concern. Our market timing model is on our most aggressive buy signal. Traders may want to be working toward fully invested, but as always, keep your stops current and in place. Okay, on Friday, the NASDAQ Composite was down 28.84 points or 0.58%. The NASDAQ is bracketed by support. By support down here in the 4,900 area and resistance up here in the 4,969 range. We're going to break out one way or the other. Either break out higher and test resistance up here in the 5164 area, or we'll break down below this area of support, which brings the 4678 area into play. Trading volume on Friday was below average and below the prior day. For you followers of William O'Neill, we are in a confirmed uptrend in the market and have been since February. Yesterday we lost 2 distribution days, today we lose 2 distribution days from our count. Distribution, as it becomes older, becomes less relevant, and so as distribution becomes a month old, we eliminate it from our count. These 2 days have become a month old, and so we've eliminated them, giving us only 3 distribution days in the past month, and no distribution days in the past 2 weeks. This is fairly bullish. Right now, our market timing model is on a margin signal. That's our most aggressive timing signal and indicates that aggressive traders can leverage their portfolios utilizing margin. More conservative traders should be working toward fully invested. Let's see what the S&P 500's up to. On Friday, the S&P was down 6.13 points or 0.29%. After closing above the 2100 level on Thursday, the S&P continues to struggle with that level, and we actually closed below that at 2099. Trading volume yesterday, or Friday, was lower than the prior day and below average. The S&P is in a confirmed uptrend, and like the NASDAQ has been in a confirmed uptrend since February. S&P also lost 2 distribution days this morning. We lost this May 2nd and May 3rd distribution day off of our count due to age. And so the S&P 500 also only has 3 distribution days and also hasn't seen a distribution day in the past month. Notice that we have this spike in volume, but on that day the S&P was down less than 0.2 of a point, and so that doesn't count as a distribution day. Right now the S&P is bracketed by support down here in the 2044 area and resistance up here in the 2116 range. We are on a margin signal on the S&P 500. I have 4 stocks that I want to take a look at for our watch list, but before we do that, just a note. All of the individual stocks that we talk about in our video market reviews are from our universal watch list. To qualify for our universal watch list, a stock has to have satisfied at least 72% of our stringent technical and fundamental criteria and continue to satisfy at least 62%. Out of our trading universe of over 7,000 stocks, there are generally only about 50 to 90 stocks that meet these strict criteria and make our universal watch list. These are the only stocks we review in our daily video market review, and for the most part, they're the only stocks that we use in our trading strategies. That noted. The first stock we want to take a look at, Masco Corp, manufactures cabinets, plumbing, and other products for the home improvement and new construction markets. We've looked at this one before. Right now Masco is working on a first stage base with a pivot point up here in the 3292 area. Notice how we have 1, 2, 3 days of lower trade here, and so Masco may be working on a handle which gives us a little bit earlier buy point, not significantly so. Masco gets a 68% checklist rating and may be of interest to both conservative and aggressive traders here. Next I want to take a look at HD Supply. HD Supply Holdings distributes products for the maintenance and repair infrastructure and power and specialty construction markets. The stock has been working on this long-term first stage base with a pivot point in the 3681 area. But notice how we may be putting in a flat base here. Flat base requires 5 weeks, and if we were to put in a flat base, the pivot point would be the 3551 area. I'm going to say that if we break above 3551 on at least 140% of average daily volume, that would be a good buy point for this stock. HD Supply, which was a spinoff from Home Depot, should be of interest to both aggressive and conservative investors. Wait for the break above 3551 on 40% of average daily volume. Next we have NetEase. NetEase is working on a second stage base with a pivot point way up here in the 186.45 area. But notice we may be putting in a little bit of a handle here with a pivot point in the 179.10 range. A handle has to be 5 days. We look for the volume to dry up in the handle. And right now we only have 3 days in this handle, so we want to see the stock continue to sell off for the next couple of days. And that would validate this handle in the 179.10 range. If we don't put in those 2 lower days, then we look for a pivot point up here in the 186.45 range. NetEase is a Chinese provider of an interactive online gaming community, internet portal, and wireless value-added services. The stock may be of interest to aggressive holders. Wait for a break above 79.10 on Wednesday or later, or a break above 186.45. Either way, we want to see 140% of average daily volume. I like NetEase because we've seen quite a bit of accumulation volume in NetEase recently. We haven't seen a bunch of distribution volume. And so Again, it may be of interest to aggressive traders. And the final stock I want to take a look at is Mobileye NV. Mobileye is an Israeli-based developer of software and related technologies for camera-based advanced driver assistance systems. They will be very important in the self-driving car industry, which is years off, and so really isn't a concern at this point. But the stock, after having sold off for almost a year, has put in this very nice little first stage base. Notice that we had this 30% uptrend. That's what we look for, a minimum of a 30% uptrend before the stock puts in a first stage base. We have a first stage base with a 68% checklist rating and a pivot point up here in the 41.37 range. Mobileye may be of interest to both conservative and aggressive traders. Wait for a breakout above the 41.37 area on at least 140% of average daily volume. That's about all I have for today. If you want to talk about any of the stocks mentioned today or any of our market strategies, please feel free to give me a call, drop me an email, or make an appointment. Come by the office, see what we're up to. Contact information is on the home page. Please take a minute to go to our subscription page and subscribe to Push Button Stock Trading. You can also follow us on Twitter at PushButtonStock. Again, my name is Cliff Backus. That's your daily video market review. Have a safe and profitable day. Keep your stops in place, and I will see you again tomorrow. Please stay tuned for our important disclaimers. All the best. Disclaimers. Push Button Stock Trading Video Market Review is produced and edited by Clifford B. Backus. Mr. Backus is a Senior Vice President of Investments, Technical Analyst, Portfolio Manager, and Partner with the investment firm of Ohannes & LaCours Incorporated. Video Market Review is produced solely for the benefit of our clients, friends, and colleagues. Anything written, stolen, and/or plagiarized in this publication is done without malice. Further, the analysis and opinions expressed in this publication are strictly those of the editor and not of Ohannes & LaCours Incorporated, its affiliates, subsidiaries, or any of the officers or employees of Ohannes & LaCours, Inc. On that note, we submit the following. The analysis, calculations, and evaluations presented herein are based on data and assumptions Ohannes & LaCours Incorporated believes to be accurate. Ohannes & LaCours Incorporated makes no representation that such analysis or calculations are accurate or that such valuations represent levels at which actual trades may occur. This report has been prepared from original sources, except where otherwise noted, and data we believe to be reliable. Ohannes & LaCours, Inc., its affiliates and subsidiaries, and/or their officers and employees or their families may from time to time acquire, hold, or sell a position in the securities mentioned herein. Moreover, opinions may differ from one entity to the next. If we are used in connection with the purchase or sale of any security discussed in this report, we may act as principal for our own account or as agent for both the buyer and the seller. Push Button Stock Trading is dedicated to the education of friends, clients, and paid subscribers. Push Button Stock Trading is an information service only. The information provided herein is not to be construed as an offer to buy or sell stocks of any kind. Push Button Stock Trading is created to aid subscribers in making informed investment decisions based wholly or in part on technical analysis. It's possible that at this time or some subsequent date, the editors of Push Button Stock Trading may own, buy, or sell the investments presented. All investors should consult a qualified professional before making any investment. The information provided has been obtained from sources deemed to be reliable, but it is not guaranteed as to the accuracy or completeness. The editors of Push Button Stock Trading make every effort to provide timely information to subscribers, but cannot guarantee specific delivery times due to factors beyond our control.